Hello, this is ICI Tiger from thetradingtigers.com. Today, 24th of August, we're going to looking at the majors, euro dollar on the main count with Elliott Wave Analysis. Before we start, let's just move to the disclaimer. Please stop and read at your own leisure, and the hypothetical performance. Okay, fine. So we start our main count of the euro US dollar on the monthly chart. You can see we take it from the primary being the primary degree in red, and we've taken our point 0 from July the 1st 2008 and taken it down to number 1, wave 1, 2, and now we're on the progression of the wave 3 of the primary degree. That's red and in circles. So within the sub degrees we have the intermediate, that's green and in brackets, as you can see there, and as we go further down we'll go into the other sub degrees, which is pink, that's the minor wave, and the minute being blue in Roman numerals. So here you can see we've actually put a projection for the wave 3 to go down, the market to go down. That's, we're looking, you know, in a few years time in 2017, expecting price to go down to that level 0.74585. But of course, you know, all this wave count has to be in play. That's really what we're looking at right now. As you can see on the monthly chart, I've got to stress again, we're on the monthly chart, price is in the oversold area, so you know, price is going to move up in that time. Let's now move to the weekly chart. We can see a little bit more granular in terms of bearing in mind we're looking for the wave 3 of the primary in red to come all the way down, that move to come down there in the longer term perspective. As we move more down in the time frames, we can actually see more what effects are happening. So now we can see the wave structures below. Intermediate, that's green and in brackets, so wave 1 has been completed of the primary, that's green in brackets, and now we're looking for its wave 2 to go up, and we put some progressive dates and entries along that way. As the price comes up, then it's going to come down. So as you can see, we've taken the dates right to July 2016, so that's the middle of next year. We're expecting the price to go all the way up there and come down, and as it comes down we have different entry levels at 132.16, 26.21, 22.13. so that's what we're looking for, price to go up to wave 2 and then move down to its wave 3, and that's off the intermediate degree. Now we're taking it down to the daily chart, and as you can see, once again now we move more into more of a granular, smaller time frame perspective, and we're looking for the wave 1 to occur off the minor degree, and minor being pink. So we've done 1, 2, 2 of the wave of its subwave, which is the minute, that's blue and in brackets. Taking it down now, now we're on the 4-hour chart. You can actually see now where and what we're looking at. We can see smaller entries, progressive to take, and we're looking at its substructure, which is the minuet, which is black and in brackets, and there's the wave 1, wave 2 comes down there, and wave 3 should be in completion. Once that's finished, we enter on the pullback at 12.43, and we look for the progressive and we're looking at that end of the month to come into play. That's end of the month, that's August to come in play, and this is just a evaluation. Anything can happen with the markets, as you know, but we're looking for its first target off the wave 3. That's 510 pips to take it out, and we're putting our stop at 1.1088, and that's where we can hope to get that target in there. That's right. So let's just now move to the 1 hour chart, and you can have a better feel for where we're looking for its entry. Same entry point, and we've put all different target points, as opposed to the previous slide here. We weren't able to do so. Here we can actually see we put 1, 2, 3, 4, 5 targets. So this is the very short term kind of perspective. We're looking for that pullback down. It could happen. Price, if you look at the stochastics, is in the overbought area, and price can come down, and we're looking for that entry level to be taken out, so we can enter in and go all the way up to the top. So let me read out the first target point. First target point is 1.13939. Second target is 1.15531. Third target point is 1.17555. Fourth target point is 1.20111.9, and the last target point is 1.2342. But I must stress to actually put in a trailing stop for this, and the trailing stop would be measured between the difference of this entry and the stop, and as we move up we actually take our targets out. And of course, as you know, if you didn't put a trading stop in, what could actually happen? You could get all the way up to here, price could come down and then knock you out, and then you're in a bit of a losing trade, but you would have gained all these profit targets. So there's significant profits to be made along the way. As you can see, it's 510 pips. That's from one point to the next point. So you'll have 1, 2, 3, 4 other targets as well along the way. Okay, so that's me. I'm ICR Tiger. Thanks for viewing. Bye bye.